Hello students, in today's session we are going to see the death of a partner, right? Death of a partner. Uh, in the death of a partner, we are going to discuss the joint life insurance policy. Joint life insurance, life insurance, insurance joint life insurance, right? Joint life insurance policy, right? They used to take, the partners used to take the joint life insurance policy, right? We will say LIP, life insurance policy, right? I will say LIP, right? LIP in the sense joint life, joint LIP means joint life insurance policy, right? If one of the partner died, right, you had take joint life insurance policy, right? Joint life insurance policy. uh, Wait, sorry, joint life policy, okay? Joint life policy, joint life policy. It is an insurance policy, right? If anybody take joint life policy in the partnership, if one of the partner dies, what happened before the expiration of the life policy? If one of the partner dies at the end of the expiration of the policy, what happens, right? That is what we are going to see, okay? Joint life policy. Here, for an example, through example we can study A and B who shared profits in the ratio of 3:1, right? A and B who shares profits 3:1. A and B, right? A and B shares 3:1, right? Took out a life insurance joint life policy on 1st March 1974 for 160,000, right? On the 1st March 1974, they have took insurance policy for 160,000, right? 160,000, A and B. B died on 15th October. B died 15th October of 1978. 1978, right? 78. And the amount of the policy was received on 31st December 1978. Received, it is an insurance policy, right? Insurance policy received the life policy on 31st December. 31st December, right? 31st December 1978. 0 and 31st 9. The books are closed on 31st December every year. Books were closed on 31st. Books are closed, right? These are the facts, right? This is one fact, right? Right. Another fact, B passed away. Death of B, right? Death of B. Death of B, right? 1970. You are receiving the policy, receiving the cash, right? Three type of things taking place. That is, on one is the summary is 1st of March 1974, they are taking the life insurance policy for 160,000 for the partners. Right? A and B are the partner. They are sharing the profits and loss 3:1. The death of the partner B take place on 15th of October 1978. Right? They are receiving the cash on 31st December 1978. Right? We used to close, the partnership used to close their books of accounts on 31st of December every year. Right? That is the fact given to you. So pass the necessary journals. Right? They used to pay a premium of 15,000. Premium. Next one is they used to pay a premium of 15,000 per year, per annum, right? 15,000 per annum premium, right? Premium, they had to pay premium. So pass necessary journal entries. Necessary journal entries. They wanted us to pass the journal entries from 1974, right? On right, first March 1974. What is the entry you will pass? Right? Normally we used to settle the bank policy by cash. Right? We will say joint life insurance policy, LIP. Joint life insurance policy. LIP is life insurance policy. Is debited 15,000, bank account credit. Bank account credit. That is the first entry we will pass. Right? 1974. Right? That is the one. Right? This is the one entry we will pass for 1974. Right? This is the number one. Number two is profit and loss account debit. Profit and loss account debit 15,000. Right? Joint life insurance policy is credited 15,000. Right? This is the entry we have to make for the year, for that year. Right? This is number one. This is the A entry. A. This is the B. A1, we charge it. We are making the payment. Entry for the making the payment. This is the expense. Joint life insurance policy payment is the expenses. So we are charging to the profit and loss account. right? So every December we used to pay. We have to pay on December, right? December, every December we have to pay, right? So this is for the January. We have paid for the January month for 1974. Again, first of third, right? Every beginning of the month we used to pay, right? We have to say A and B who are shared the profits on 1st of March for 106,000. The annual premium was 15,000. Beginning of the month we had to pay, but we assume we are paying on the beginning of the year 1975. We had to continue up to 1978, right? Same entry you had to repeat it. LIP, life insurance policy, right? Bank account, right? 15,000, 15,000, right? So B, this is a payment, right? This is the entry made for the payment. This is the expenses to P&L account debit 15,000 and joint life joint life insurance policy is credited 15,000 premium, right? Premium we have made it as an expense, right? On 1st of January 1975 76 we have to pay same thing, right? A joint joint life insurance policy 15,000, right? And bank account credit 15,000, being payment made for the joint life insurance policy, being payment made for the joint life insurance policy. B is profit and loss account debit 15,000 and joint life insurance policy is credited 15,000. It is the payment made, adjustment for the expenses. We have charged it to the P&L, right? Again on 1st of January 1977, right? Again we are making the payment, right? A joint life insurance policy 15,000, bank account credit 15,000, right? This is for 77 for payment made for the joint policy. B P&L debit 15,000 and joint life insurance policy is credited 15,000, right? That is the we have charged it to the P&L, right? Again on 1st of January 1978, right? We pay joint life insurance policy of 15,000, right? Bank account credit 15,000. This is the entry for the payment made, right? Again on B, right? Joint sorry B P&L debit 15,000 right? Joint life insurance policy is 15,000, being it is charged to the PNL, right? So up to 5 years we have made. We have made the payment for 5 years, right? 5 years, for the 5 years we have made the payment, right? This is the journal entry for the whole year, whole period until his death, right? His death take place on 15th October 1978, right? 15th October 1978. So every January we are making the payment, right? Now we are getting on 31st of December, 31st of December 1978, right? 1978. Bank account debit, we have received the life insurance, right? Account debit 160,000 policy amount, whole policy amount we are receiving, right? Bank account debit, and joint life insurance policy is credit 160,000, right? Bank account debit, bank account debit, joint life insurance policy is credit. That is end of the day, end of the year we are, because we are closing the accounts only 31st of December 1978. On that date we have received the cash from the settlement from the insurance company. So bank account debit and joint life insurance policy account credit, right? Now we have to disperse it among the partners, right? One is dead. Even though he is dead, we had to pay his portion, right? So the portion is profit share. We have to joint life insurance policy debit 160,000, right? Partners capital account, or their own accounts of A and B equal to 3:1, 4. 120,000 and 40,000. 120,000, 40,000. Right? 40,000. It has been dispersed. Right? We have settled his amount. Right? Settled the amount. Even though he died, we have settled his insurance policy. Because of his death, his portion is paid. This is for capital account. This may be the paid off through some other way, or capital account. We can settle the capital account through capital account. His nominee can get the amount, right? This is the journal entry that we had to pass in relation to the joint life insurance policy taken by the partners, right? If one of the partner died, this is the accounting treatment we had to make. Okay, I understood. This is a normal one, and you can in the what you call in the big sums, they can give some adjustments like this, and they may relate this one with the what you call what you call these reserves, or something like something like that, with the reserves and those things. So we can with this we can conclude our session, and next class we can, in next session we can talk about the other ways, right? Okay, thank you for joining, and take care, and I hope to meet you in next session. Okay, thank you, bye.